Aaron Dillon here, Managing Director of AG Dillon & Co. Here is July 26, 2024's pre-IPO stock update. Wiz, a cloud security company, has walked away from a $23 billion acquisition deal with Google, opting instead to pursue an IPO. The decision, influenced by antitrust concerns and a preference to remain independent, came despite the deal potentially doubling Wiz's $12 billion valuation from its latest funding round. The company aims to achieve $1 billion in annually recurring revenue, having reached $350 million last year. Wiz's rapid growth, securing $100 million in revenue within 18 months and counting 40% of the Fortune 100 companies as clients, underscores its strong market position. No doubt the recent CrowdStrike issue this past week may lead to more business for Wiz. So Google, which acquired Mandiant for $5.4 billion in 2022, sought to enhance its cybersecurity offerings amidst fierce competition in the cloud services market. Wiz has a $13.1 billion secondary market valuation. That's up 9.1% versus its May 2024 round. The company has currently has a 37x revenue multiple based on the secondary market valuation. The Google deal would have put it at a 65x revenue multiple. So those are rich numbers. I anticipate the logic is $1 billion in revenue at a 20x revenue multiple is a $20 billion IPO valuation. So I could see that happening. I'm rooting for the Wiz team, and I hope these guys pull off that IPO. Revolut, the UK online bank, is nearing a $500 million employee-owned share sale, pushing its valuation up to $45 billion. There was a buzz a few weeks back that the valuation was going to be at $40 billion, so it's a little bit higher at 45. The share sale, involving new and existing investors like Cotu Management and Tiger Global, signals like a recovery in fintech. Revolut reported a $429 million net income for 2023 and forecasts $976 million in 2024, with revenue growing from $2.2 billion in 2023 to projected $3.7 billion in 2024. The digital-only finance platform, serving over 20 million customers as of March, aims for a $9.3 billion in annual revenue by 2026 and $100 billion by 2040. The valuation reflects a multiple of 17 times its recent revenue, compared to PayPal's 2 times, and New Holdings 8 times. Revolut has also secured a UK banking license from the Prudential Regulatory Authority after a 3-year wait, allowing it to offer credit products and take deposits. The fintech giant, founded in London, serves 45 million global customers, with 9 million in the UK, its key market. Previously hampered by the lack of UK license, Revolut relied on its 2018 EU banking license from Lithuania. Despite the milestone, Revolut will enter a mobilization phase capped at £50,000 in total customer deposits for up to 12 months. That's not a lot, so I don't expect have big expectations for the UK banking entity for quite some time. This achievement follows the company's improved financial transparency and restructuring to meet regulatory requirements. OpenAI, the AI large language model company, is launching SearchGPT, a prototype search engine, challenging Google's dominance in summarizing information and citing sources like the Wall Street Journal and the Atlantic. SearchGPT allows follow-up questions and links to sources in parentheses. It features a sidebar for more results and sources, and is being tested with select users before potentially integration with ChatGPT. OpenAI's partnership with publishers like News Corp and Axel Springer are vital, as the tool aims to enhance search with high-quality, reliable content. OpenAI has a $103 billion secondary market valuation. It's up 20% versus its April 2024 round. Cohere, a Toronto-based AI large language model company, is now valued at $5.5 billion, following a $500 million Series D funding round led by PSP Investments, with new backers including Cisco Systems, Fujitsu, AMD Ventures, and EDC. This funding round more than doubles its previous $2.7 billion valuation from 2022. Founded in 2019, Cohere focuses on large language models for enterprise use, attracting hundreds of customers like Notion, Lab, and Oracle. Cohere's annualized revenue rose from $13 million in 2023 to $35 million in March of 2024. With a headcount set to double from 250 employees, Cohere's models support 10 languages, with plans to expand globally while maintaining its Canadian base. Cohere has a $5.7 billion secondary market valuation. It's in line with its new primary round. $35 million of ARR at a $5.5 billion valuation is a 175x revenue multiple. And that is very high. I have OpenAI at 30x and Anthropic at 26x. So it'd be interesting if Cohere can continue to command this type of multiple in the near future. Goldman Sachs Alternatives Unit is leading a $540 million investment in a continuation vehicle created by venture capital firm NEA, involving stakes in 11 companies, including Databricks, which is 38% of the vehicle, and Plaid, which is 10%. The transaction aimed at providing liquidity to NEA's limited partners also includes investors like Industry Ventures, Pathway Capital Management, and Goldman Capital, with Jefferies Financial Group advising. The deal was priced at roughly 19% discount to NEA's internal valuations, which value Databricks at $46 billion and Plaid at $8 billion. I have Databricks at $44 billion in the secondary and Plaid at $4.8 billion valuation. So it appears that Goldman did not do a great job getting execution here, in my opinion. Not to mention that they have to invest in these other kind of 9 less desirable companies to get the Databricks and the Plaid exposure. So these continuation vehicles remind me of mortgage-backed securities. You toss in a few lower credit quality bonds into a portfolio with mostly high quality bonds, and the blended credit quality is still investment grade, but the issuer was able to move some of the not so great bonds off of their books. So this kind of same financial logic is used here in continuation funds. I would have preferred to see this investment group, Goldman and the other folks investing, hire an investment advisor like A.G. Dillon & Co., right? And you can build out a separate account portfolio of pre-IPO stocks that they wanted. So they would have gotten exposure only to the pre-IPO stocks names they wanted. You didn't need to get the other 9 companies. You can just get the 2 that you wanted, and you could get much, much better execution. Looks like they overpaid for Plaid for potentially 40-50%. Also important, this move highlights the financial innovation that venture capitalists and their investors are creating to realize gains and drive liquidity. I see pre-IPO stock companies remaining private for longer, so these secondary market transactions will become the new normal. More liquidity in a market is better for all participants. So most importantly, the founders and the companies. So very excited to see how these developments play out in the years ahead. Neuralink, the brain-computer interface company valued at up to $8 billion now, following its first human trial, is preparing a stock buyback offer for employees and investors. Neuralink's valuation more than doubled from last year's $3.5 billion, with the secondary market trades reflecting premiums at 117%. Employees compensated heavily in shares can see significant windfalls, with shares trading at $50 up from $35 in January. Neuralink prefers controlled tender offers to manage its shareholder count, adhering to federal limits. I anticipate we're going to see a structured tender program from Neuralink in the future. This means like an annual or semi-annual tender process for investors, both buyers and sellers, to invest into the company. Elon Musk polled X users or Twitter users on whether Tesla should invest $5 billion into xAI, Musk's AI large language model business, with over 2/3 voting in favor to do it. So Musk revealed that xAI, founded in early 2023, has aided Tesla's full self-driving technology. xAI recently raised $6 billion, reaching a $24 billion post-money valuation. X, formerly Twitter, is rumored to have a 25% ownership in xAI to compensate the company for use of its data to train and be a source for xAI AI models. xAI has a $26.1 billion secondary market valuation. It's up 8.6% versus its May 2024 round. Klarna, the consumer lending and payments company, is using AI to significantly enhance efficiency across various aspects of its business. AI-driven customer service agents have reduced the backlog from 30 days to 0 and decreased resolution times from 14 minutes to 2 minutes. So these efficiencies have led to an annual savings of $40 million by reducing reliance on outsourced customer service personnel by 700 people from an average headcount of 3,000 people. In their marketing team, AI is handling 80% of copywriting, allowing for 50% reduction in team size while increasing productivity. So a lot more with less people, half the size of the team. AI is also employed in their legal tasks, drafting initial versions of contracts, and in the communications team, evaluating sentiment and factual accuracy of around 40 daily news articles about the company. Perhaps most interesting, Klarna has not been hiring new employees since September last year. So leading to a natural reduction in headcount from 4,500 to 3,700 employees. So it's about 20% of the employees leave annually. So this managed attrition, averaging 70 employees per month, avoids layoffs while shrinking the workforce. Klarna plans to continue reducing headcount while increasing overall productivity. Despite the hiring freeze, Klarna has committed to increasing cost per employee, offering higher salaries and more equity to the remaining employees. So aiming to balance reduced total employee costs with better compensation and benefits for the workforce. So basically, the company to employee deal is automate your job away, get more stock in the company for doing that, for basically automating your job away. The company results will improve because there's less expense. Company has a higher valuation, and employee stock is more from that improved valuation, and employees that have net more wealth. So it's a really fascinating model. I believe we're going to see similar efficiency gains across businesses in the next 3 to 5 years. And this is going to be an unlock of efficiency that will reduce headcount dramatically at most businesses, driving massive earnings and ultimately great stock performance. So it's going to be really fun as an investor over the next 2 decades, in my opinion. Klarna has a $10.7 billion secondary market valuation that's up 60% versus its July 2022 round. Let's look at pre-IPO stock performance as of July 22, 2024. Up this week, xAI's up 8.8%, Stripe's up 5.7%, Anthropic's up 3.7%, Rippling's up 3.3%, and Ramp's up 2.8%. Down this week, Grok's down 7.6%, Chime's down 7.5%, CoreWe's down 4.2%, OpenAI's down 2.8%, Canva's down 1.3%. Top valuations, ByteDance $294 billion, SpaceX at $210, OpenAI is at 103, Stripe's at 70 billion, and Databricks is at 44 billion. To see more current valuation, revenue multiples, and performance data reports, go to www.agdillon.com/reports. Okay, let's look at performance for the AG Dillon pre-IPO stock vintage indexes as of July 22. The 2024 vintage index, the top contributors since inception, that's just the beginning of this year. Revolut's up 167%. Rippling's up 114%. Andrew's up 51%. Klarna's up 45%. And Epic Games is up 35%. There are no detractors in the 2024 vintage index. Key metric averages for all vintage indexes 5 years or older. We have 450% cumulative return since inception. 60% of that is realized and distributed to investors. Here's the hardcore VC metrics at 5.5, TVPI, 3.31 DPI, and 2.18 RVPI. And it's 4.1 years to quote unquote return the fund. So to see summary and annual vintage specific data and fact sheets, there's 20 of them, one for each of the year for the back test. For the AG Dillon pre-IPO stock vintage indexes, please visit agdillon.com/index. Okay, that's it for me this week. If you have any pre-IPO stock research needs, please reach out. Thanks, and see you guys next week.